Hey guys, welcome to another 9 to 5 dividend investing video. I am Mike, and in today's video I'm going to be discussing two things: what the payout ratio is and what the dividend yield is and how we get those numbers. So as a dividend investor, these are two very important metrics to me, amongst other things that we've discussed before that I'll link down in the bottom. But these two, payout ratio and dividend yield, usually as a dividend investor, probably the first two things you might look at, because it tells you how much dividends you're gonna get from that company and how much they're gonna pay you out from their earnings. So with that said, guys, disclaimer: I am not a licensed professional. If you need help investing in the stock market, please seek a licensed professional. And always remember, like, subscribe, and share. I appreciate the comments too. I love responding to you guys, and I love the community. The dividend community is amazing. Just the stock market community in general. Everybody's always so helpful and wants to help each other out all the time. So with that said, let's get into it. So the first thing we're going to look at is the dividend yield. What is the dividend yield? The dividend yield is the ratio of a company's annual dividend compared to its share price. The dividend yield is represented as a percentage and is calculated as follows. Dividend yield equals annual dividend divided by share price. So guys, again, that's annual dividend for the year divided by the current share price. So let's take a look at Apple's dividend yield. So guys, here is Apple, ticker symbol AAPL. So if we take Apple's annual dividend of $3.08 right here, and we divide that by Apple's current stock price of $230.09. What a day Apple had today, huh? We get the dividend yield, which is here. It says 1.36, but Yahoo Finance hasn't updated. Yes, it's actually a 1.33. So again, we take the forward dividend of $3.08, divide it by $230.09, and we get a dividend yield of 1.33. So guys, as we see, the dividend yield, if it remains the same, can go down or up compared to the stock price. So if the stock price for Apple goes up, the yield will go down. If the stock price goes down, the yield will go up. So say you capture a company that has a 3% yield, and all of a sudden you wake up the next day, or it usually takes a little bit more time, but you wake up the next day and now it's 2.8. So the stock price probably went up for the company. That's one way that we look at dividend yields. That's one way that you could calculate if a company is overvalued or undervalued, especially with dividend paying companies. So now let's get into payout ratio. So the payout ratio defined. What is a payout ratio? The payout ratio shows the portion of earnings paid out as dividends to shareholders, typically expressed as a percent of the company's earnings. The payout ratio can also be expressed as dividends paid out as a portion of cash flow. The payout ratio is also known as the dividend payout ratio. So how do we get that? We take total dividends divided by the net income. We get the dividend payout ratio. Again, that's total dividends divided by net income, dividend payout ratio. So as we see here, Apple's payout ratio currently is 26.27%. So Apple only having a 26% payout ratio, that usually means the majority of their earnings are reinvested or used to buy back stock, which does cause the stock price to go up also. So Apple has so much room as well to raise that dividend if it's only at 26%. You see a lot of companies with higher payout ratios with 60, 70, 80, 100. So if it's 100%, that means the company is paying all of their earnings out as dividends. And most of the time you see that in a lot of REITs, retail investment trusts, or utility companies like Con Ed. So like I said, Apple has a very low payout ratio, can pay it out, can raise it anytime it wants technically because of the stockpile of money they have. But most of their money is used for share repurchases, which helps raise the stock price. and to reinvest back into their own company. So again, for example, with payout ratio, if a company has an earnings per share for the whole entire year of just $1, and then for that whole year, quarterly, let's say they pay out 15 cents. So there's 4 quarters in a year. That's 15 cents every quarter. That equals a 60-cent dividend. You divide both, you get a 60% payout ratio. So I hope you guys understand it. I hope I explained it very well. These are 2 very important metrics that are looked at by a lot of investors, especially dividend investors. Granted, it is called a payout ratio or a dividend payout ratio. The dividend yield, that's self-explanatory. That has to do completely with dividends. So guys, with that said, this has been another 9 to 5 dividend investing video. Make sure you give me a like, a subscribe, and share my videos. If you have a comment down below, let me know. And guys, remember to check out my Twitter page and my Instagram. I'm going to put those down below also. I really appreciate it. I love this community. I love the dividend community. I love the stock market community. And guys, dividend invest.